Alright guys, I'm back at it again, another day. Today is Tuesday, August the 22nd, and it's about 9:15 at night, Pacific Standard Time. I'm going to take a good look again at the pound dollar and the euro dollar, because those are two trades I did post last night, and they did turn a pretty good profit. So I just want to see what I just want to give an update on that. But first, I want to look at another market that may be of some interest. This is a euro dollar. This is a euro Japanese yen. And if it's correct on my daily chart, I have a W here, X here, and then I have a A, B, and then basically this is a 3, and then this is possibly wave 4 that ended here. It can also come down just a tad bit lower and end at around 126.94. I did go short on wave C of 4, which I jumped in at 129.55, and I could have got out here at 127.61. I was expected to go to 126, so I did stay in. Right now I'm about 82 pips, but I do have a stop here at 129.21, and I'm probably going to bring that down to roughly 129 even, to lock in about 50 pips of the 80. And if the market decides to turn back up, which I'm expecting another move up for wave 5 of 2. The problem is this could be the end right here. So this could be 1, 2, 3, 4, 5. This will be ending diagonal here. So what I don't want to do is, this could be 1, 2, 1, 2, and then you have wave 3 go down. So with that being said, I'm actually going to bring my stop back here and just lock in about 35 or so ticks, because the potential to the downside is large, especially if this is wave 3. So I'll keep an update on this one throughout the rest of this week, because if it does have one more wave up to approximately 132, well then we'll be looking for a short, a long-term short opportunity in this particular market. However, if it does continue down, well then this is the top, this is 1, 2, this is another one, and then the 2 would end somewhere around here. And in that event, you will see one of 3 that will probably blow through 125.97 at some point. So I'll keep a good eye on that one. Let me go back to the pound dollar, which yesterday it was literally like right here. Price was like at 128.91. You could go to that video, which was on the 21st of August, and see it. And I called a short in that particular area. I said it was possible. My primary was that this was wave 4, and then I saw this here, and then I saw this here, so that this is 1, 2, and this wasn't really here yet. It was like right here, or somewhere right here, and I was expecting a move down, and overnight it did that, which netted me 90 pips. It's only a half a contract, but it's still 90 pips. Now, price has already found some support at the 1.382 area. It could turn up, which is why I have my stop there to lock in some points. However, I am expected to go to 127.74, which is a 200% mark, 2.0. And if it does that, then I'll bring my stop to the 1.382 and lock in, well over 100 pips, and then just continue going, because it could also go lower than that. But this was a good trade all in all. If anyone took it or anyone saw my previous video yesterday, this is pretty much what I would like to do on a daily basis. These videos are all about uh, Elliotticians, basically, who are beginning traders, but they do understand basics. They do understand Elliott, and then from there, if we form a group, if you have any questions or any markets that you have problems with, then I would love to label them, give you my analysis, and then we go from there. So I apologize in advance for those who don't know anything about trading at all. I can give you advice on where to actually go to school and do your due diligence and get some research on. But as of right now, this particular video series is not for very beginning starting trader. Uh, I'll try to post certain things, but if you're stuck in Elliott, this is for you. if you don't know anything about Elliott, it's absolutely not for you. I definitely want to keep my niche to that particular audience. So moving along with that, let's look at the euro dollar. And I'm telling you guys, the probability for this particular trade is very high. Right now, as you can see, I'm up about close to 80 ticks. If this is wave 3 here, we're in a triangle wave B. So this is wave A of 4, basically. This is A, B, C. This will be D. It could go a little bit lower, but it can't go lower than this current B, or the triangle will be invalidated. Right now it is finding support right as this particular area. Look at where it's crunching up. It's showing and I'll show you on the up data as well, but this is also showing that prices should be appearing to head up. If it stays for support here, it should show some resistance once the market goes back from current levels of 1759. It will probably go to around 1800. At that point, it will be a really good entry to sell. Here's why. The risk versus the reward. The reward, let's start with the reward first. If you were to get in at around 1800, give or take, and this will be wave E, your stop will be at the top of wave C. So you have a very tight stop of 33 pips, give or take, 30 pips at 1830 where the top of C is. If this does if this in fact is a triangle, well, this is wave 4. This is wave B of this will the wave E will end the wave B of 4, and you have to have a wave C that's going to go down to bare minimum 1600. If you catch it at 1800 and you go down to 1600, that's 200 pips with a 30 pip stop loss. Come on, risk versus reward. That's a very high probability trade, high reward, low risk. And this is a period like it is a triangle. It's clear. The A is the top. This is the A of B. This is the B of B. This is the C of B. The C did not go above the A. This is the D of B currently, or it could go a little bit lower. Still, it still did not go below the B. You'll see a wave E that will probably put it in the 1800 area, give or take a few pips, 10 or 15 or so pips, either at 1785 or at 1815, somewhere around there. Either way, it cannot go above this current high of 1830. If it does, then this particular triangle is invalidated, which means that this count is no longer valid, which means that this will be a bullish, basically, and I would have to, come up with a new count. But so far, it's going to be 80 pips just based off of this particular wave down. Now, all I need to do is bring my stop loss back here because I'm not going to take any profit. I'll rather let it go back up and I'll get back to 40 ticks or so. And then I want it to break through, which is the thrust out of the triangle. It'll break through here and it will take off. We can look at, let's look at what up data is saying. Let's see, let's see here. That's the euro pound. We're gonna see which market is buying. So let's just do this. You know what? I don't want to do that actually. I want to for that's euro CAD, euro Aussie. Alright. So let's do this. This was the 8. Where did my euro? Well, since we're here, let's take a look at the euro. And as you can see, prices did go down, like I suggested, but I believe price is probably going to find some resistance either at current, or it'll probably come down to around that area, the lower 128 area. And let's see what the Ichimoku cloud is telling us for this particular market. That's good news. Price is already below all of the lagging indicators, all of the moving averages basically, and it's below the cloud. So as of right now, there's no indication telling you that prices is going to go in reverse. So I would stay in this trade. If you did not get this trade, then I don't see, as of current, I don't see an opportunity to get in. But if one does cut, if you did take the trade, well then you're fine with just moving your stop to lock in some profits. But let's take a look at the euro. And let's take a look at the 240 just to show you exactly. You can see it. This is the top of 3. This is A here. Now this is A of B. This is B of B. This is C of B. This could be A of D actually, and then you'll see B of D, and then you'll see C of D come to, let's say, around this particular area, but it cannot go below that particular low here. So price may not move much. The triangles take a very long time, but in the event, if prices was to go back up to close to 1800, it would be a really good opportunity to go short. And let's just look at what the cloud is telling us. Look at this. It's already letting me know that price is getting ready to turn bullish. It's already saying that. Look at the indicators. Look at how the indicators are going above the cloud. It's going through the cloud. It's already saying that at current price, which was that low, it has found some resistance and price is going to change. This particular color is warning me. All these moving averages are warning me. This one in particular is really warning me because it's already in the cloud, which is it's already telling me that prices is going to reverse, it's going to turn. So this is a very good indication that price is going to turn up from the current price here and go up, and it's probably going to go up to around 1800, something around there. Also, let's take a look at point figure. Prices are now currently on top of the trend lines. So it's basically already letting me know that unless this prices breaks through these particular trend lines and continue down, it's going to just ride. This is going to find some support and it's going to go back up. However, it's not going to go above this. It's probably going to come out right here somewhere, and then that's when it's going to take off. It's still showing that they're expecting prices to go to 1.15. I said 1.16. So if you got it at 1800, that's close to 300 ticks. These indicators don't tell the 100% truth, but they also don't lie 100% as well. So the good thing is that once you understand how to do this, it becomes a really good tool. So with that being said, I want to end this. I don't want the video to be too long. If you are thinking about trading the euro, Definitely, I believe on Elliott's terms, it is currently in a triangle wave B, and price should turn up from current levels. It should break through the cloud, and it should find some resistance at around 1800, 1785, 1790, give or take. But if you were to go short at close to 1800 as possible, 1830, 1833 would be the stop, and your reward could be closer to 1500. So if you have any questions, feel free to just leave a comment. If you haven't subscribed, please subscribe. And I'll be back tomorrow for another video on an update on this market, on the update on the pound market, and I'll see what else looks good for us to take a look at and to trade. Happy trading.